Another question that's the topic we continuously talked about last year. Retail properties appear to be in the tank. What is your perspective on the retail market moving forward?
Well, that's a great question. I think first you have to look at the fact that I don't think retail is as negatively impacted as people think. Number one, because the retail market kind of hybrids and overlaps with the industrial market today. If you think about it, why should the Gap have a 15,000 foot store on 3rd Avenue where they're number one selling product and number two warehousing product? Why have 20 or 30 pairs of the same size and type jean sitting in retail space that you're paying $300 a foot for? It doesn't make any sense. So I think based on modern technology and the way people are shopping online and things like that, I think they still want to go to a store and try stuff on, the experience of doing that, but have 2 pairs of that type of jean and size in the store and let somebody try them on and then go onto an iPad and click it in and buy as many as you want and have it delivered to your house the next day. So I think last mile industrial really has become a hybrid of industrial and retail. So I don't think it's it's not doing as poorly as you would think. The flip side of that is that retail rents are off very, very significantly, and probably the biggest challenge that we have today is when an owner comes to us, they have a mixed-use building, there's a couple of apartments above, and the retail is rented at $800 a foot, and the current market is $400, and there's 3 years left on the lease, right? So we go to that owner and say, yeah, you want to sell it? You're going to have to sell it at a 7 cap. And they look at us like we're crazy and say, a 7 cap? There's nothing sells at a 7 cap. And I say, well, replace the $800 a foot with $400 a foot, you're really selling at a 4.5 cap. You got 3 years where you're getting an inflated rent. And so what happens? The seller just says, I can't bring myself to sell at a 7 cap. I'll wait 3 years, hope the market's better. And so those properties are effectively being frozen out of the market because they're just not going to move. So I think that if you look at various sectors, there are some areas of the city where rents are actually holding firmly or even popping up a little bit. Notably, Times Square seems to be doing very well.
Fifth Avenue, Lower Fifth.
Yep, Lower Fifth. But in some areas, values are down very considerably in terms of price per square foot, and that's impacting the market. So, and then you also have the dynamic of looking at how many companies are going bankrupt, going out of business, versus how many new tenants are coming into the market. And unfortunately, that dynamic is heavily in favor of the companies going bankrupt, which creates issues.
Another question specifically, which you talked about relative to the numbers last year, but land is way down, Bob. When do you see this coming back?
Okay, well, one thing that I should mention that I didn't mention in my remarks was that the fourth quarter of last year was abysmal from a number of properties sold perspective. In fact, if you look at how many buildings were sold citywide in the fourth quarter of last year, it was the worst quarterly total since the first quarter of 2013. If you look at the Manhattan market, the number of properties sold in Manhattan in the fourth quarter of last year was the worst quarterly total going back to the first quarter of 2011. So activity was abysmal. But our contract signing activity was up very, very significantly in the fourth quarter. Like, it was, for the first time in 2 years, it was fun to be a sales broker again, because there was a lot of action, a lot of contract negotiation, a lot of contract signings. That will show itself in first quarter numbers because those contracts will close in this quarter. And in the same way, I think in the land market, that diminution in value, that 18% drop in value in Manhattan, has created a lot of activity. So we have some clients that are still getting prices from 2 years ago that we're telling, hey, take this. You got to be crazy if you don't take this. And they're trying to get those transactions done. But this drop in value has stimulated a lot of activity. So I think, the amount of land that has sold in the last 2 years has been down very significantly. And as I said, land is the most highly reactive. When we saw land values fall, in the fourth quarter of 2015, I had said to a number of clients we were selling property for, hey, it's over, you missed it. Unless we get really lucky, you're just not going to get the pricing. And they got pissed off at us because they said, hey, 2 months ago you said we were going to get this price. We said, hey, sorry, we're not buying it. We're just trying to tell you what we're seeing in the market. And then the 2016 stats come out and land value is up 5%. So they say, Knakal, you don't know what you're talking about. The values are up 5%. You said it's down 20. And I said, yeah, they're up 5%, but the volume of sales was down by 78%. So only 1 out of every 5 people who put their property on the market were actually selling. But I think this reduction in value and the fact that we've had this low for 2 years, we've had very low transaction volume in land, means that there is a very distinct air bubble in the pipeline and in the supply. So I think that with the reductions in value that we've seen, that's going to stimulate more activity. Again, sellers are getting used to the new reality. They're going to come down to meet the market. And part of the reason why we've had this increase in contract executions is that the bid-ask spread has compressed. And it's compressed mainly because sellers are coming down, not because buyers are going up. So to the extent that dynamic continues, that should bode well for land, and we expect to see an uptick in land this year for sure.
Pivoting a little bit, question that again, a topic that you hear about a lot in the press. Bob, I've heard you be critical of the new Midtown East rezoning. Why is this the case, and what do you actually think it will produce?
Okay, firstly, I've not been critical about the zoning. I think it's great that the rezoning passed. Long term, I think it'll be a great thing for the city. My comments that may have been interpreted as being critical or negative about it is that the way the politicians were positing it, they were saying, well, we're going to have 5 million new feet of office building in Midtown in the next few years. And, they identified 16 sites that could take advantage of this new zoning, the projected sites, they call them. Of those, there are really only 3 that will see any activity in the next 5 years. And of those 3, there's really 1 that's likely. That's the W Hotel site. I think folks who own that probably have it on the market. We've tried contacting them, have not been successful, but that site should be moved, and that'll be the first one to go probably. We're handling the Pfizer site on 42nd Street, but there's a 5 to 7 year lease back on that transaction, so that's not going to be put in play for a while. And the Intercontinental Hotel site on Lex is another one that's a very obvious site, but that just went through a $180 million renovation, so I don't think that's going to be knocked down anytime soon. So my comments were one that I think that long-term Midtown East rezoning is great for the city, but it's not going to produce a lot of results in the short term. I also think that the mechanism the city has put in place for buying the additional air rights through the transit improvement zone improvements is probably out of whack because they were based on the old value of air rights before they revised it downward for the landmark transfers. So I think that's going to create an issue with the affordability of that air. And I also think that the dynamic that has been created with the landmark air rights of there's 31 landmark buildings in Midtown East. There's about 4.5 million feet of air rights sitting on top of those 31 buildings. And essentially, the city's created a Dutch auction where you'll just go to every successive owner and say, hey, this seller's willing to take this, how much lower than them will you go? And you go around to all 31 till you get to the lowest price. And the tax that you have to pay to the city on every square foot you sell is about $70 a foot, whether you sell for $500 a foot or $71 a foot, you're still paying $70 to the city. So I think that might dissuade some people from transacting.